Hello, everybody, and welcome to the Plus3 Futures and Commodities show. We are recording here on Friday, the 4th of October, about a half an hour after the market closed. And on today's show, we're going to be looking at a key timing window that's coming up that's going to have a major effect on the markets. In addition to reviewing crude, the dollar, gold, silver, ES, NQs, bonds, a lot to cover on the show. My name's Ben Maldonado, and as always, I'm here with my partner, Barry Hederachi. How we doing, Barry?
Doing great, doing great.
We got a lot to cover as we enter this timing window. Let's start with the cash SPX.
I can't remember if we looked at this last week. I feel like we looked at this chart because we looked, remember we
I think
started
we looked at it on the Wednesday show, the
Wednesday show,
midweek
right?
show. Yeah,
Okay, good.
yeah.
And before that, I think the last Fridays we talked about looking at current price from different vantage points, different highs and lows.
Yeah, banging its head on the ceiling on this one.
Exactly. So one of the September, October 2022 lows have been like a key level, right? It was a major low, and we've
Mm-hmm.
been using that.
Mm-hmm.
And also we've been using the recent lows, and because those are the important ones, so you always want to keep an eye on them. Looking at the looking at this chart, well, we had this 5750. This is where we got it. It's coming off of this 270-degree level, 270 degrees up from the September 22 low. We had two lows. I'm using both of them. This is a false break low, and here's the original low. And often, I think I've mentioned this last time, like often one or the other will work better. So it's always good to work with both just in case.
I'm laughing, Barry, because you just said 5750 is the number. Guess where we closed today? 5749.63.
Pretty good. Pretty good.
Another example of Friday closing at a key level.
Somehow they get dragged into these lines.
Yep.
So now let's take a close. So what are we doing here? We're looking at, okay, so what kind of resistance do we have coming off of that low? Well, we're up 270 degrees. This is a clear resistance. You can see we've been bumping up around the here for a couple of weeks now, and we get sold off. And we ran one more time up into it on a Friday. Now, as you guys know, we also had some other levels we were looking at. Now zooming in, so we want to remember this 5750 because it comes from a key level. And
Hmm.
just to show you, we can also look at it from the low, the October low, and this is where we get the 5673, and that's sort of the bracket. We're kind of in there.
Hmm.
And funny enough, you think it would make it easier, but we've been sort of below one and above the other one, and this is the kind of stickiness that you get when these kinds of cycles sort of overlap or compress, however you want to call that.
Hmm.
And the reason why we want to keep an eye on a couple of different things. Know what I mean?
Absolutely.
And so right there. So getting back to where we've been going off of this low back in April only because it helped us get that last get
That
that high.
90 by 90. Yep.
Yep. And that was a big deal. That was a big trade.
Hmm.
So looking at that, and we want to use that and the following price action to see how everything goes. And so far it's been perfect. We broke above it. And this is clearly what we mean when we say break above and hold above. You see how clean
Hmm.
that has been?
Yep.
It,
Absolutely.
we not even we traded across it. We don't even have a body in there, just wicks. you know,
That's right.
we basically broke above, stayed above, rallied a little bit, came back, and it stayed above. And when we look at it from a couple of different vantage points, we saw where 5750 comes from, and now we see where the 5673 level comes from. So we're firmly stuck in there.
Hmm.
Um, so that's the basic layout. Okay, now what do we do from here? So I talked about last week, looking at it from the last swing low versus the last, the low before the high, and all these different ways to look at things. And if we take it from the August low, looks like we could go a little bit higher. If we take it from the low in
September.
September, you can see that we are perfectly stuck under this 45-degree point. So what do we do? Do we have mixed signals? Not really. What we have is we broke out. We have structural support around 56.73. You can see the old high was right there. Even if we dipped a little below, it would have been okay. We have these highs, and these are realities. We have to deal with these. And now on the last leg, we did a clean 45 degrees up, and that's a measured move in the S&P, well, in most markets. And then we corrected very, very tight consolidation. We didn't come back to the quarter of a square or anything. We didn't even come back to test this. So that tells me, there's a little bit more punch left in this, and we're probably going to go up and test the highs just one more time. That's what it looks like. Now, at least we know where the level is. It's well, from here, if you put it exactly there, it's a little bit higher. So let's just go with 57.60, 61. How about that? So that looks like the level based on the coming out the September low, 57, what did I say, 61,
61,
right?
yeah.
So there we have it. So what's up for next week? Just looking at this without even, we have a lot more to go on. We're going to look at it, through the lens of the futures market, the ES and the Dow and the weekly. But for now, what I can say is, it's really a play between the support here at the 56.73 and the resistance up around 57.50, 60, right up in there. And so what would tell us that it's going higher? Well, already it's telling us it's not going lower because we weren't able to take out 56.73. Now, if we can somehow settle above 57.50, 57.61, this area, clearly we're on top of it. We got more to go.
Yeah.
That's just how it is. And so we'll have to deal with it when we get there. But just like it's been for the last couple of weeks, we're stuck with this, right up against the resistance level. So we have to deal with that. So that's how we're going to deal with it. Now, when we come to the August low, it's kind of saying, hey, we could go up a little higher, right?
Sure.
Because we go up and meet the 90. And that would be just enough to break that 45 in here and do a false break and turn down. So we're big fans of false breaks. Why? Because we got one here, just the last high. We got one here, right? And we got one here, and we got one here. So pretty much every turn has a false break in the cash market, because it pops up. If the ES does
gaps,
right, gaps in the morning and reverses, right? And now you guys know what to watch for. The thing is, it might do it during the trend, but we're looking for it to happen at very specific intervals and levels where we have squares and these really important price levels. It can do in other places, but it really doesn't matter. Like this could have been a false break, but who cares? So that's what I'm seeing for the cash, and the rest is not too far off because they're all kind of tied together. Anything you want to add, Ben? This is kind of my snapshot for the cash.
No, I think that's a good summary for cash. You got the levels, and now you just watch price interact with them and see which way it tells us it's going.
Yes. And now we know the levels, right? And a couple of things to do with pattern, you guys. So we want to really watch this because, look, the time we consolidated here, we built up a pretty good value box, right? A lot of support here. And then if you look across, we hung out here. And if you look at the low of that little box we did in August, you can see how we were 3 bars right here. And it's all along this 55.82, which we had way before prices got there. So that seems like a key level. So I feel like we're kind of doing a similar thing here between 73 and 56.73 and 57.50. You can see how we popped above very clean, and then we went on to establish a nice little box, right? We've been all over this in the last 2 weeks. So what does that mean? What it means is if we pop above this and we manage to hold above this 57, 50, 61 level, clearly there's more upside. We might even blow through this 90. So we have to respect that and really keep that in mind and go with that trend. The second thing is when it's like this, we can easily go up and false break, do some kind of outside reversal kind of a shenanigan. So you want to watch for that. And if we do that, we get stuck below 56.73. We might come back and retest it and push up to maybe 57, 57.12. Looks like somehow, these levels come on their own. I don't like try to find the midway point, but that looks pretty damn close to the midway, maybe 57.05 or something with the midway. But then onto the downside, I was expected to break. And if it gets stuck below 73 or get up to 57, 12, 10, and then roll over, then we have evidence for a big, for a decent high where we might get a decent correction.
Sure.
All right. That makes sense, right?
Absolutely.
All
Yep.
right, great, great. Now let's look at the cash really quick.
Or futures.
Futures, sorry. So in the futures market, what do we got going? What we have is we have a 90 right above. So it looks like it's got some room to run. I'm not going to go through all the squares because we did that with the cash. And I think you guys get the relative idea, right? Those are the points we're looking at. But here we also have 58.92 to the upside. And the 90 here is right around, let's say 58, 53. 58, 53, 92. That's the upside limit. But we have a much lower high here. So let's see if we can even make a new high. And this gives the whole, the false break theory a whole new meaning, because if we go and tap the 90, we tap the 90 and as a secondary benefit, we just did a false break over these other highs, right? So we have a couple of things going there. And as for the 50%, well, we'll look at the other chart we'll look at these contract to get some exact levels off of this low, but this looks okay. We've been working with the continuation. So these levels, these numbers, these areas are going to hold up. Let's look at the Dow.
Still banging around that 216.
Yeah. We're going off the same low that we started with with the cash chart. And if you look at this 216, I mean, look at the grind right up here. I mean, look at that. And for me, being that I work with this, it's simply the square, right? Square levels, just like we got stuck here at the 144. See how we came up here? Just spent almost damn near a month before we broke out the upside and held above right there, right? And slowly moved on up to the 50% of the square, came back, tested it, 50%, came back. So when it's doing this, we know why it's doing it, because clearly it's because of the square level that we have. Again, the key thing here is, can it get above and hold above, right? If we do, and we drew this out a couple of weeks ago, I can't remember which episode we did this on, but there is a bunch of resistance up above 44,300 being the max of that, but starting around 43, let's say 43,090, right? So it's quite a range, but as we get above, we're going to hit some of that resistance. 225 degrees is up right above here. So if we put the 90 just for a second, just to get a reference. Sometimes I like to do that just so you can have a reference to see. Yeah, just to see. Because, they both played a part here. Clearly the 180 was, you can see how we worked through that. And so you can see, this consolidation is not happening right up against the 225, right? Where it's happening against that 216. So we have to give it that. But if we're going to go above and tap anything, well, this 225 becomes really important, and then this entire zone becomes resistance. So we have to keep an eye on that. These are more like, I feel like this is more like a lesson in Gann squares than talking about what we're seeing.
But it's important to know that, because then you have confidence in the levels. People need to understand how they're derived.
Yeah, I think so, right? It's okay to mix it. Tell us what you guys think. I mean, I know we mixed a little bit of education, a little bit of market talk about actual trading and levels to watch. Tell us what you think. If the balance is okay, tell us. If you want us to skip the not so much talking about squares and their characteristics, we can, spend more time on levels and trading strategies, which we don't do so much because everybody have their own strategies, and we're just giving them the framework.
Yep.
Right, Ben?
That's it.
All right, let's take a look at the weekly S&P. Really, really important. So this is
That's your daily.
Yeah, we want to really look at this.
Oh, there it is.
speaking of squares and whatnot. So here we're coming up into, I mean, we're coming into a square. It's what is it, 108 by 144 by
144.
108.
Mm-hmm.
And that's right around November 9th. Okay.
Gee, I can't remember. There's something going on around there. What's happening around
Yeah.
there?
So I hear. So I hear. And we're, look how we're leaning right into that. I mean, I love that.
Yeah, it's crazy, right?
It's leaning right up into that. Now the thing is, 144 is right here. And normally when these squares come up, plus or minus 1 bar, sometimes it could be 2 bars. So that's why his price is important. Somehow price got there first. So sometimes if price gets there first, you'd have to burn some time. So we might be burning time up here. But anyway, as far as the weekly goes, look, we're at resistance. If you want me to call this out, let's say, what is it, 58.27 basis the weekly, and 58.68 is also another level. So we're right up in there. We're right up in the resistance zone. It's something we have to pay attention to, because from these levels, it's like hanging on to a bar. They can let go any minute. So that's why we always wait till, we always say, let's wait till we get on top of it.
I mean, a good example is looking 23, like when we were coming up onto the 72, didn't quite make it, and then boom,
hung out,
sold off.
And then when it started, it just gets going, right?
Yep.
So that's why we're always looking for it to settle above and then deal with it at that point.
That's right.
What else? Yeah, that's it for the weekly. So that's what we have.
That's not bad.
No, there's our 108.
Mm-hmm.
And that is, well, this is the thing, Ben. See, that's where we get that 58.68. It's stacked up right there too.
Right there.
So that's another thing. And from here, it looks like a 45. Let me switch. So isn't that interesting, right? So here we're just right up against. So you can see how it's all bunched up between right below this 58.68 number.
A lot of stuff there.
Yeah. So what that means is we have a lot of overhead. And there's two ways we get through those things. When there's that many from that many critical points, either we blow through it, just like we saw the cash blow through that, what was it, 90 or
the 90, 270.
Either we blow through it or we fall spray against it, and then we turn back to, to do a counter trend. So that's where we're at, and we have enough timing for next week. There was a bunch of little short timing counts that came in, coming off the recent past. They all line up. I think we talked about it either Wednesday or last Friday, how they're all lining up into going into next week. Where was it on the cash chart? Was it? Yeah. So here we have a 36, we have a 72 coming up,
45,
54s. Yeah. A lot of things lined up. And all of these I'm calling out because you can extend it by a few days, and the next numbers are coming up. So there are a lot of numbers setting up, and you can see we have timing and we have price, and all of it we have to pay attention to. And it's funny because don't we have FOMC and was it PPI that's coming up Monday or Tuesday?
I think it is one of the inflation reports. Yeah.
So right into the time zone, we also happen to have news, and that's kind of how it all comes together. So let's watch this and see what happens. Okay, so let's take a quick look at this. Do you remember this, Ben? We were looking at this chart.
Yeah, a while ago we looked at it. Yep.
So clearly we broke the circle and came back, like slap in the face, come and tap it before we run back up again. But we were talking about this little equilibrium line and how that can become resistance. It did become that, and we talked about how we can bang up against it a few times. But what happens is, as time goes, it's getting steeper, and sometimes it'll jump to catch it and miss, and then that can start a correction. So anyway, that's overhead, and it's quite a ways overhead by now. So let's see what happens. One other thing I noticed here, these vertical lines, you guys, are FOMC announcements, right, Ben?
Those are. Yep, second day of the meeting.
Yes, and you can see how, a lot of the times you get moves coming, right after or right around. And if you look at the highs, So we had an announcement here, and then we went a little higher. We're drifting around a little bit. And I was looking to say when else, what other times did it drift like that? Well, we drifted right here back in April,
Mm-hmm.
right? The news came out and we were kind of drifting a little bit. And what do we do here? False break and then low.
Yep.
And something similar happened here, back in July. Remember the July high? The big,
July of 23. Yeah.
right? That was a big high. And
Mm-hmm.
what happened after the announcement? We kind of messed around for a couple of days. I was at reversal, back inside, and it dropped, and that started this entire thing coming into October.
Mm-hmm.
So, I'm keeping an eye on that, and I'm also watching these other timings coming in and prices getting hit. So all of these things are happening, and we're just keeping track of it. Not that we don't trade. This is the analysis part, but to keep in mind, how to frame this. Like, where are the frames? Where are the boundaries? And if you guys have other things to add to this, let us know in the comments if you agree with these things. I know you guys use all types of techniques, so maybe like I don't really watch the fibs. Maybe there are some other levels in here. Maybe there's some other timing levels. And if you guys do any planetary stuff, tell us what's coming up. That's it for
Yes.
indices. Yeah, I think we're done. I think I
Okay.
covered it fairly well.
That's very good.
All right, let's get into the fun stuff.
Here, the negative correlation continues, huh?
Mhm. And look at that. And just Wednesday, we talked about how 124 was the important one. If that goes, we're going to go.
Mm-hmm.
And it went, and here we go. Now, this high, remember we talked about the timing, you guys. I think it was last Friday or the Wednesday before. I can't remember, but we were talking about how, we were 180 high to high. Remember, we were talking about 135,
Yeah.
315. And I said, hey, these counts are really important. So it's very possible, let me get the squares right, very possible that we get a correction off of that. And sure enough, we have an ABCD in the works.
It's
And
perfect. Look, put it on.
yeah, okay, let's see. I just,
Bingo.
oh my God, we already hit it.
Yep. Perfectly.
All right. Well, that doesn't make it exactly easier.
Well,
I'll tell you what,
it's either gonna blow through it and accelerate, or that's the correction, right?
exactly. I was just going to say,
Yeah.
if it now that, we know from, if you guys have been watching us for a while, we play with these ABCDs a lot. And one of the characteristics is that if the ABCD, when it hits like this perfectly and it gets blown through, it usually continues for a little bit longer, right?
Big move. Yeah.
So it's possible we come up and hit the old structural support.
Mm-hmm. Or could even head back to the 45.
Yeah. So that's about 120 and a half
Mm-hmm.
to 19 and a half, right in that area. That seems like a reasonable place to go. And that's really the big test, right? If we somehow can't hold it here, we're definitely looking at we're definitely looking at lower prices anyway at some point.
Mm-hmm.
But just for now, let's just go here and deal with it when we get to 19s or the 20s. Let's see for now.
Right. Right.
And like Ben said, if the ABCD holds, then we have the 124 to deal with quite a bit of overhead now. So it's not the same 124 we had a couple of months ago. So we'll deal with it now for now. So bonds a week, yeah, we did it the ABCD, and we are down 45 degrees from the high. Is it
Mm-hmm.
what it looks like? Yeah. So ABCD, and we're 45 down from the high. Yeah, we could expect some kind of a bounce. Now, on the other hand, with that kind of a measurement, what happens if we blow through it? Well, we have a lot more to go.
A lot more. Yep.
So the weakness in the bonds might be held for a bit, and now we know which levels to watch. Let's jump on to the weekly bonds. So here we got so close, and I think even last week I'm like, hey, that got close enough.
Yeah, you did say that.
Right?
Yeah.
128.07, close enough for business. Sure enough, that was a high. Then, we took out the low of the high and we're down. And that kind of a down move, you can see the tail on this thing. Clearly there's, sellers were getting in position. So it looks like it's going to go a little lower, like I said, 120 and a half or so
Mm-hmm.
might be the place. Let's see what happens. That's it for bonds. Do you have anything to add?
Nope. I think that's it.
We're
That's
good,
it.
right? All right. The rest of the stuff just get more and more.
So the only thing with bonds, we already have a monthly lower low this month already.
Yeah. So that ain't positive.
No, it's not.
All right. So crude, if you're following us, we nailed this thing. We had a low here. We had a 60-degree run, and then we were looking for a pullback low, the counter trend to start trading. And I think Wednesday we talked about it, right?
Yeah. Yes, we
And
did.
that came in. This is the lower high we talk about, and then we took off. Then we talked about 73.5 being the target. If we can get above it, we're going to go higher. So here we are, 73.5. And look at today, held right above. This is what we're talking about, holding above, right?
Mm-hmm.
Very clean, held above. So now, unless something, peace breaks out all over the planet, everybody decides to stay home,
And
then we
not
can
use oil,
not
right?
use oil, then we can expect it to break below 73.5. Otherwise, it really looks like the new bracket is going to be 73.5 and 79.50.
Mm-hmm.
And that's still okay. Like we've been in here before, but I'll tell you, the 79.50 to 83 is sort of we're redlining at that point. If you want this to sort of blow up to the upside, it's really, this is the red line we need to cross. If we get about the 50%, then we're getting into the 90s, and if we cross the old high from September of 23,
Mm-hmm.
then it really opens up the upside. So just be warned. Square was good. It's funny, the market didn't even have time to put in a false break. And,
No,
that would have been good. It almost seems like they didn't have time to do it, right? That's what I feel like might be a naive way to think about it, but
no, it's
it
good.
did get to the square.
It did get to the square.
Yeah. So, all right. So that's crude daily, and the weekly's even more beautiful.
Yep.
Beautiful. I love this. Why? Because, well, for one thing, we called it.
Right.
Next thing, now we can, we know a very important lows in place, and we've been talking about it. We want some confirmation, and no better confirmation than a big old outside reversal over last week.
Huge.
And we're back into the box. So the box might not have the same meaning that we had during the consolidation. Now we might just hurry up and get moving. But you want to watch, lower end of that 1/8 of that line is around 74. Let's say 74.5 is right there. Again, if we settle about 74.5 basis the weekly, I would say weekly is in very strong, very good shape, super strong. Looking at the daily, we know there's, a little bit of leeway. We can get down to 73, double check, and move on up any kind of a pullback. But holding, these are all levels with pickup speed. It's like the runaway, and every marker, you pick up some velocity. So we're just starting out because we slammed into the 60-degree square, stopped here. Now we're starting to reverse. That's kind of what I'm seeing. We haven't. So that means this big triangle we were watching, we did a false break. And, if we didn't have these lines, you wouldn't know this false break is done, right? You would think it's going to continue lower. Right, Ben?
That's right.
I mean, it's amazing. Now we know, there's a very good chance we're done here. I mean, really, the other thing is the 70, that level, the 70 level, what is 79, 78 is what hold on, let me go back. Because this is kind of important. 79.50. You guys see that? 79.50.
The half square, roughly.
50% of the square. Now, if you take that and you go to the weekly, we're not even using the same square, okay? But just from the great triangle drawing, if you
Right.
get to the middle, it's right about 78, 79, right?
Yep. Yep.
So that's the next real resistance point from geometry or patterns, I guess. And if you look at it technically from squares and other ways, on the daily, we get the same number. So that's really the next target. Now, if we hit that and we can hold above 74, all right, guys, the party's on. And I think, we might have a lot more upside. We're going to have a lot more upside. It's just a matter of timing it. So this looks like the start of things in a big way. Okay.
Agreed.
So crude, we got, it's starting to move. All right. Gold, taking a little break.
It's also banging its head on the roof.
Totally. And it's this roof of the 216. And yeah, we're just resting here. Again, it's a very, very narrow, tight nervous kind of a holding pattern here, this consolidation. So it's very tight, and the reason I say that is it's like a cat sleeping, if you just kind of scare that, it's going to pop right on top of that. And then we have a whole lot more to go.
And it's doing the same thing it did at the half square and then the full square at 144, just in a more compact fashion,
Yeah.
but same pattern.
Mm-hmm. I mean, at lower prices, we can see that, but we can see a little bit more here. I mean, it's
Yep.
amazing as we get higher. Normally, the volatility should increase, but here we're tightening up more and more. You
Yeah.
know what I mean? Like,
Yeah.
we think it would be more volatile up here, which
There
means
seem to
people are a
be
little bit,
fewer sellers, you know?
and people are a little bit more nervous, and it seems like nobody's nervous. Everybody's like, nope, we're holding on to these things.
Yeah.
So if we break, you guys know the level. So basically the daily here, it's what 26.93.94. If we get on top of that, next level is 28.40. Can we go higher? Sure, why not? I mean, ultimately, we have the room and space to get to 29.85, hit 3,000. Why not, right? Get to
Hmm.
29.85, do a false break at 3,000, and then take the real break it probably deserves with this kind of a run. But the fact that after at the 50%, what happened and how we broke below and how tightly we held, we knew it was going to go to the full square. Now, again, we're doing a similar thing, right? We're very tight consolidation. So watch it, watch the upside. Downside, well, like we were talking the other day, even if it gets down to 25.50, it's still in very strong shape. Coming down to 26.25, 26.23, it's perfectly normal, right? And being way up here this tight is kind of abnormal, which
Yeah.
can lead to abnormal pricing, right? So that's what I'm saying. We could gap through this and really go. So watch it. I wouldn't be shorting gold, is I guess the bottom line here.
Right. Right. I mean, if you look
Um,
at the corrections since, like 23, it's all been fairly tight.
yeah, yeah. And especially being tied up, as we go higher is
Hmm.
that's not the common print, you know.
No.
All right, let's look at the weekly. Another reason why we're stalled, 225 from the low in 22. I mean, this is kind of where it all got started after the false break, which
Hmm.
we also called. If you guys are longtime viewers, we called this low, and that goal is going to go much higher. I think we used to laugh about, oh yeah, 2,500, right?
Right.
And
Here we are.
yeah, look at us now. So 2704. Again, basis the weekly, we really need to hold above it. And what do we have here, Ben? Look at that. Inside week, right?
Inside week.
So it's possible we correct here, take a little breather and go higher. So watch the weekly high and low to see which way we break. But we really need to get above 2704 or so to get things back on track after this consolidation. All right. Let's take a look at copper. Copper is doing fine as long as we're holding about the 50% level, which is 453, 450, let's say 454. As long as we're above that, we're okay. Earlier, we talked about, this quarter square being in resistance, and sure enough, we tapped the quarter square, came back to the half. Copper has been trading technically just beautifully, right?
Yeah, it really
And if you
has.
want to do counts, we can do 1, 2, 3, and we can expect some kind of a crazy fourth wave before we continue on. And so this is a place you probably don't want to get long because you're going to get crunched up, meshed up.
Hmm.
And I would wait for it to set up. Anyway, that's what it looks like to me, because this looks like a 1 and a very simple 2, right?
Yep.
And that which could lead to a complicated 4. So we don't know how that 4 is going to act out. So long as we're above 454, I think copper is in really good shape. If it gets below that, we're going to expect, we're going to have to expect a little bit more of a sloppy correction. I think sloppy correction is probably the key word here.
Yeah.
But as long as we're above 454, that sloppy correction could end in a hurry.
Otherwise, it's acting like gold. It's just kind of chopping around that level, but waiting, just burning
Yeah,
time.
exactly. And here's the big square from
Hmm.
2020 low, and here we got up to the 50%. We've been talking about that being resistance on a weekly basis. Sure enough,
Yeah.
we got right to it, and we're correcting normal again. So let's let it finish and see what comes next. Let's move on to the dollar.
The star of the week.
Mm-hmm.
And
And
look where we end up.
right at the 50%, 50%
Yep.
weak. That's what
Yeah.
And you know what I noticed? If maybe you guys noticed, but I don't know if you guys noticed it, but most everything that we've been calling lows or highs on, everything clicked into place this week, right? The crude, the bonds, and here we have the dollar. We were at a 100.5, and we were looking for it to do a false break here. Didn't quite get there, 99.50. But then last week we were talking about, hey, we did get to 100 and we're close enough. Let's see what the price action does, right? Then we wait for price because we were up 120. Remember, we were talking about the 120 coming
Yes.
in
Timing wise, yep.
timing wise. And I'm wondering if I don't even have my square set right. There we go. That's 120. So we got to 120. There's a square
And
right on
took
the high.
off.
Yeah.
Yep.
So the 120 came in. We
Perfect timing. Look at that.
perfect timing. We rallied and a pretty perfect rally between levels.
Yep. Right to
From
the
the
half
lows
square.
right to the half square, 102.75, let's say. So really the next step is to see if we can get above and hold above, kind of like here, how we were looking for it to hold above, but it couldn't, right? Slipped right through.
hmm
And here was the next level where it stopped perfectly. So we're just going to follow through. Now it's going to clearly have some overhead when it gets up into the 104 area. Remember the old overhead up here?
Yep.
So we'll deal with it then. For now, looks like, if the dollar is strong enough, sure enough, we're going to get through this. Otherwise, I would expect it to consolidate above 101.75 or so
hmm
and hang in there. Anything you want to add, Ben?
No, just the rally looks good
Mm-hmm. And the low looks pretty good.
and the low looks good.
And the low looks really good here because here's the other triangle we were watching. And we've been talking about a false break, knowing full well there's a 90 here.
hmm
And this 90 has been a good square for this. And well, sure enough, we came up. We did do a false break against the low in 23, but we didn't quite get here. But that's good enough. This is still a false break, and now we know it's a false break. You can see the move up, right?
Yeah, the price action after.
A very strong week, and now the weekly is pretty opened up. Let's see what we do here. I don't really have anything up until we get up into about 104.25 or so. Of course, we have this trend line here. It could possibly kiss from below, but let's see how it all works out. But the low looks good. So time to trade the dollar in the long side.
hmm
Right, Ben? Trade the new trend.
That's it.
And why do we think that? Although when the whole thing looks like we've been going lower and this could be just another counter trend. Well, because of the 90 degree, because it came to our support and looks like the timing is there for it to turn. Make sense?
Yes, it does.
That's our call. All right. Looking at the euro, kind of like dollar having to do with the 50%, which is coming from a whole nother direction. The euro is going to have to do with this 144, which is pretty much where we landed today. So I think if we get through this, it looks like it's around, let's say 94, 95, 95.25.
hmm
Hard to split hairs here. 95.25 or so. If we get below that, then we're down below, the square 144. So again, it puts the market into a weaker spot. Now, why am I using this from September of 22? Well, that was a big low, and we ran up 180 degrees up into July of 23. Then we had this whole big, drag out session for over a year.
hmm
And so this could be, technically we have a potential false break here. Didn't quite get to it. We did know we have a false break there also.
Yeah, you do.
And we have, and then it traded lower. So key level is what we talked about. I just want to make it easy to read. So let's say 9,400. How about that? Fair enough. It's easy enough to remember. So 9,400. Let me put a line there. There we go. That's the level to watch. If it gets below, I think the highs are in place and we're going to continue. If it holds here, let's see what happens. It's probably going to have to consolidate and burn up some time. Looking at the weekly euro, we did have our key level that we were waiting for it to hold above and go up. And, we had some plans for it to potentially get up to the 90, finish that cycle off and false break here. Didn't quite get there. This is what I mean. It seems like suddenly, market was on the way to do something, but suddenly some news popped up, right?
Yeah, something changed for
Something
sure.
changed and people wanted the dollars. We don't
Hmm.
know why.
Not yet, but the news will come out eventually.
So 109.50 is this level we've been watching, sort of like a balance point, one of the levels. And we broke through it. So if we get stuck below that, then the next level we have to do it with this 108 level. If 108, I mean, that's the big support, right? If we get below that, then I think Euro's in for an entire whole new down leg because of all the, we finished up here, and the dollar might be ready for a whole new up leg. So we'll watch it. For now, 108 is still support, and we're looking for, if we can't get above 109.5 here, we're looking for further weakness. We good?
It sure looks like we're heading to 108, doesn't it?
It sure, yeah, right. It sure does.
Mhm.
What else do we have to look at? Hey, do you remember this chart, Ben?
Yeah, yeah, yeah. That's the crude chart.
So this is the crude chart. We looked at this, I don't know, a couple of weeks ago, maybe 3 weeks ago, maybe a month ago. It's in one of the old
Hmm.
episodes. And the thing here is, when we looked at it, I used this for a slide for one of the episodes. Anyway, 64.60 was a key level. And here, we came up and tapped the circle right there. And I remember you saying, hey, these taps are really, really important, especially when we have so many taps
Yeah.
already touch points on the circle, right?
Yes.
And look at what happened, not that just went higher. We came up, tapped it again
Yeah.
this week.
Tapped it again and did an outside reversal
Outside
week.
reversal. So this is why we're a little bit more confident. Like, hey, maybe it's in place. Um, and looking at this, you can also see the big trend line that's coming down, and we know when you break that, the big move had already started. But we caught it at the baby stage on the daily, right at when the 60-degree move finished up. So that's kind of what's happening. I wanted to show you guys a weekly just for scale of we're going to follow this circle. I just want to show you the acceleration over here that we could be going into.
It
And
would be
not that
massive.
yeah, it would be unbelievable. So it's not that it's going to happen, but hey, things like this, things that have been working for a few years. And here, I'd say at least 10 years, we want to, continue to watch them. Kind of boring, but this could be in play. And of course, the confirmation will be when the trend line breaks on the weekly, and everybody can draw that trend line, not a problem. All right, I think I'm about ready to wrap up. We have a couple of things. We have the natural gas
Which
came
I'm
up to
gonna
the
I'll
quarter.
talk about. Yep.
You can talk about great. It's good because we just came up to the quarter square
Hmm.
on the new contract, and we got stuck under that, right? You see that?
And we're correcting a little bit. Yep.
We couldn't quite get on top of it. So after the correction, we should be heading higher. I really
Hmm.
feel like the lows are in place. So that's that. Now it's just to the upside. Another great chart. Every week we were covering it through here. It was kind of boring, but we
Hmm.
but we were watching it. And we talked about how important the 50% square is. And when this low came in, we called that low out, and the 50% held. And when this low came in, we were looking for the first counter trend, right? We were looking for a higher low, and that came exactly on the 50% square. We were looking for a move above 18,054, saying if we can get above that, we're going to hit the 19,450. Get above that, we had 20,380, and the only number you see on the board above that is 22,709. And we look at that, Ben.
Look at that.
We're right there. Well, we might not be quite done, because if we're going to do the whole show, might as well get to the 144, and that's that's 24,060,
Hmm.
let's say, right? So before that, we have a quarter square here. We have this to deal with. We really need to get on top of this, but we are squarely on top of the 50% correction. So even if we correct, watch these levels, watch the 21,765. That's the
That's the key.
108 degrees. Yeah, that's a key to
Hmm.
watch. As long as we're above that, I think we can definitely pop up and touch 24,000, this level up here.
Hmm.
And the other quick lesson in here is, remember when we put this ABCD up? I mean, I can't even remember. It was maybe a month back, right? A couple of months back.
Right. Right.
We talked about how, if it doesn't stop here, if it gets on top and the market's very strong, it's going to continue to go higher. And
And
here's,
it
I think
sure
this,
did.
yeah, and this is a good classic example of that.
Hmm.
We broke the trend lines. I mean, here we have a kiss back to the trend line before taking off. All the markings were there. And, if you guys have, you can go back and check the tapes. And we were basically really isolated that. And we were calling the market to go higher. And who knew, right? And
That's why you try and catch those because you never know.
yeah, you want to, yeah, if you're trading in these markets, you want to catch them. Otherwise, what did everybody else end up doing? Oh my God, chase it.
Right.
Right? You can't, I hate chasing them.
I can't chase.
No,
It's terrible.
I have a phobia against chasing markets.
It even if it works, it's a miserable experience because
Yeah.
the whole time you're like, I shouldn't have bought it this high. I shouldn't have bought it. I
Yeah,
shouldn't have
yeah.
chased it.
I can't chase those, but I can do breakouts. It's kind of a
Yeah.
different deal, right?
Yeah, it is a
Breakouts are a little
different
bit
deal.
different than chasing a market.
Yeah.
So anyway, so that's all I got. Let me put it to you and look at some of
Excellent.
the commodities and Nasdaq and Bitcoin, right? We always
Yes,
cover
sir.
Bitcoin. Somebody was asking about Bitcoin last week, and I said, well, we cover it every week
Yes, we do.
on the Friday episode. We also do a episode on midweek drop on Tuesday night, Wednesday morning. So if you guys want to catch that, and it's a much shorter one, we try to cover everything in about 30 minutes or less.
The speed round. Yeah.
The speed round, but we hit all the numbers, right? And thread everything where they're supposed to.
That's the idea, is to give you an update, for things that have moved, what the new numbers look like, what's the important spots to watch.
And if you guys like our work, if you like this video, please remember to like and subscribe and share the video, and also maybe use the alerts so you know when we drop the new videos. And thanks for helping us grow the channel. That's kind of all we ask, right, Ben?
Yeah, absolutely. It's great.
You guys have been really good, so thank you.
Yeah.
All right, let me put it back to you.
So here we got the NQs, Barry. What do you notice?
Potential triangle, that's one thing, and we got above the 50% of the square.
We did, and we still have a lower high.
A couple of super highs, right? Against the last pivot and the high.
Yeah. I mean, remember, this market was leading on the way up, right?
Mhm.
And we're lagging now because S&P and Dow have both made new highs, and this hasn't made a high yet. So to me, this is really, really important to see, if this rally is going to continue. NQs have got to participate, right? It's got to get up here and make a new
Yeah.
high. And right now it's lagging. We battled, last week we were talking about how this half square was really important. We needed to stay above it. We battled for 2 or 3 days, and then today, not quite, but we pushed up and closed above it. So we want to watch next week and see, can we stay over this, call it 20,000 level? I think you have 20,010 on your 30-minute that you post. So it's essentially the
Close
same.
enough, man. Couple
Yeah,
of
that's
points.
the 20,000 is the key number. If we're above it, we can theoretically and potentially push up to this, the all-time high area,
Mhm.
which, as you can see, this is a square of 52. That would give us, 4 squares up, where we made the high. And so that's the key. The key number is 20,000. We watch it. If we get stuck below it, that'll cement in, especially if we take out this low, it'll cement in that lower high we're looking at here on the daily. We had decent time counts at the high, Fibonacci number 55, high to high. We did 38 here, low to high, for this secondary high, the lower high here. So we have to watch it and see. The push today kind of pulled the bacon out of the fire for the NQs. We'll see what next week has to offer. Let's take a look at the weekly. The weekly's interesting is that we reversed. We made a lower low this week.
Mhm.
So next week we want to see, can we take out that high, and it would only be a 1 bar, sort of pullback, and that would give us again more confidence that we can go up here and make new highs, over this half square, which is a little over 21,000, call it 21,080. But you can see it's struggling compared to the other markets.
Yeah.
In terms of making progress.
Yep.
Let's look at the calendar day. I want to show you the calendar day because calendar day shows a little different picture.
Mhm.
We made the high, sharp pullback right onto support, the full square here. went up and made this high. And look what we did into the high, Barry. 77
Yeah.
high to high, 52 low to high.
Mm-hmm. Mm-hmm.
The thing that is keeping us afloat, as you can see, structurally, we pulled back right to support, and it held so far. What
Right.
we really want to see, if you want to get on this and on the short side, is we want to see it get stuck below this full square level, which is, call it, 19,800, 19,760 in that area. If we do get below it and then get stuck under it, that's where we get Fat Pitch City. That's it for NQs. Anything you want to add?
No, you're good. Good cover.
Okay, let's go look at Bitcoin. Look at where Bitcoin's ending the week at a
Mm-hmm.
pretty key spot, right?
Just over the line.
Just over this full square. Last week we were talking about, oh, maybe we were going to go up and do this ABCD or make it up to this half square,
Mm-hmm.
and we turned down earlier in the week. Looked like we were going to get stuck under, this full square here, which is that 62,100 area. And we just got enough of a push today where we're going to get a close over it. So this is your key here. If we get stuck under here, heading back down, if we can sit on top, this thing could be set for a breakout. I mean, we've got a really long consolidation here. This thing has been consolidating since February of last year. So there's a lot of energy built up in here. I do like how we came down to structural support, bounced, made a higher low here, bounced, higher highs, comparing these highs here. So it looks like the odds favor we're going to move higher, but we know the level, 62,100. For now, we stay on top of that. We can go up to this half square, and that's around 67,850. And if we get above that, then it's the all-time highs up in here,
Yeah.
over 70. So we know the level. It looks, the bias is bullish by the way the structure is here. So let's see if we can get the price action to match. Let's quickly take a look at the monthly. Last month, inside bar, big inside bar.
Mm-hmm.
And you can see we've just basically, been chopping around here for months.
Right.
8 months. So if this bar can take out the high here, of the inside bar, then that gives us again another clue that we might have a push higher. Anything you want to add on Bitcoin?
No, let's see. Let's see if we do an inside bar within an inside bar.
Which is possible. We've been doing that for months.
Mm-hmm.
So let's see. All right, let's talk about commodities. The dollar strength this week, it didn't decimate the commodities. I think it slowed them down. Because we were running like the last few weeks, especially last week, we had all these big moves in the commodities. This week, it was more of consolidations and pullbacks. If we're talking about the grains, they all kind of, went nowhere, went up, went down, went nowhere, and they're pulling back a little bit. So I'm not going to highlight the grains. There's not much to look at there. Still very bullish long term. Let's watch this consolidation, watch these pullbacks for additional higher lows and reversals, and we'll get on those. On the softs, sugar, like as we talked about before, is pulling back. Cotton is continuing sideways. Cocoa is continuing sideways. Coffee is chopping around in this wedge. So there's nothing to do there. There's no great setups. The ones we're going to talk about today, Barry talked about gold and copper. We're going to talk about silver, crude oil, and nat gas. So let's go to silver first. Bottom line is that the dollar definitely had an effect in commodity land this week. All right, what's silver doing? If you remember, we had highs and square outs here.
Yep.
That came in here.
Nice ABCD correction.
Yeah, we did an ABCD correction, and now we're moving up. We've been all week we were trying to take out these highs, right? You can see Monday we pushed up, made a new high, sold off. Today we pushed up, made a new high, sold off. But they're not like hitting it enough to say, oh, it was definitely a false break and it reversed. We're going the other way. It's just kind of like you were looking at in gold. It pushes up and it pulls back. It pushes up and it pulls back, and it goes nowhere. But we're near the highs. I mean, look where we closed.
Yeah, and the bars are making higher highs and higher lows.
Absolutely. but it's like a balloon being held underwater right now, right? The pressure's building, and I think we're going to have, a big move to the upside. It's just what are they going to do first? Are we going to pull back? Are we going to test this full square? Are we going to just go sideways and chop around the half square like we've been doing? And you'll see the perspective when we go to the weekly and the monthly of why I feel that way. So here's your weekly. Now notice what we got. We got to close above this full square. Full squares here was about 32.05. So next week we have the opportunity, if the low stays above 32.05, to clear the full square on a weekly basis. And that's big. That's a big thing, right? Because you can see what happens every time we clear a square, right? Clear this, move up. Clear this, move up.
Mhm.
And that's what we want to see with silver on a weekly basis. Time counts. Um, I have a 22 and a 52 at the high today, which is not bad. So we got to watch that. And remember, this is a weekly. So we got to watch that. Here's where the 90 came in, right? And we got a reaction off of that. So this coming week, we want to watch and see what kind of reaction do we get off of this timing of a 22 and a 52. In addition to Barrie, a 237 off the 20 low
Mm.
also came in at the high here. It's close to 240.
Right, right.
So we have to see what, and the marker for us on a weekly basis is this 32.05. We stay above it, everything's kosher and everything's bullish. If we get below it, we have to look for what kind of correction are we going to get? Is it going to be an ABCD? Is it going to do like a gold and basically just chop around and go sideways and burn off time? Let's watch and see.
Yeah.
That's your weekly. Let's look at the monthly. The thing to notice about the monthly, and this is why when we were talking about the weekly, we want to see us, clear that full square. Like give us bars that are fully above that square. Look at what happened when we did it here on a
Yeah.
pullback, right? Beautiful, right?
Looking good.
Yeah. And here we already have made a higher high for the monthly basis on silver. So big picture looks very good. I mean, again, look at where we are compared to where the highs are going back, to
Mhm.
09. Other than that spike in like 2011, 2012, we're above historic prices in silver. So silver looks good.
Mhm.
We just want to watch this next week with those time counts that are coming in, what kind of price action we get off of that. Anything to add here on silver?
No, it looks good. Looks strong. Looks like it has maybe looks like silver is catching up. Remember, we were talking about how silver was a
Yeah,
little bit behind the early days.
a little bit behind gold. Yep.
And it's like the total catching up.
Yeah, yeah. Let's see. Let's see
But
this
we do
coming
have some
week.
timing, so we have to watch it up in here.
Yeah, we have to watch the price action this week due to the timing. But as I said, it does look good. All right, let's go to crude. Here's Barrie covered the weekly. I'll spend more time on the monthly with you guys, but let's just quickly look why this looks good. There's your half square. We closed above it. So next week, if we can sit on top of this half square in that 73, 73.50, 73.75 area, it opens up the full square up around 85. Any pullbacks, as long as we stay above this, 72, 73 area, we'll be in really, really good shape.
Mm.
Let's look at the weekly. Outside reversal. Barrie already talked about that, but this is a really important bar. We looked like we were going to head down and take out these lows, and we ended up, taking out the highs of the last 2, 3 weeks. So the next key level here on the weekly basis is your, call it 76, 76, 75. If we get above that, full square opens up, which is around 89 and a quarter. So we want to see ultimately over the next few weeks, we want to see us get on top and clear this half square, right? Because then that basically puts this last year of price action, 6, 7 months of price action underneath us. Let's quickly look at the monthly. What's interesting about the monthly, we already have a higher high.
Yep.
We're coming right back into the apex of the triangle. So again, this is another sort of data point that this 76 area is super important. If we can get above 76, we're above the apex of the triangle, and this gives us the opportunity to push higher. Interesting that the timing came in here too, right on, we got this big bar right on the, perfectly on this timing.
Yeah. Because,
6 squares of 52,
yeah, yeah.
off of that low.
52 low to low almost.
Yeah. So this is what you like to see. You like to see the time counts. You like to see the things coming in and moves happening. Barry showed you a few charts where you get a big move right on the timing. It it adds a little extra significance to the move of the bar. All right, let's jump over to nat gas since you already covered crude. We don't need to review that. Wanted to show you here on the daily. Had a pretty steep pullback today, but look where the pullback ended up. Right
As
on our full
usual.
square.
Yeah.
Yeah, right on the full square.
Mhm.
So next week we want to watch it. We want to see, can we stay on top of this full square? If we do, super bullish. Opens up, about 340, 342 is the next level up. If even if we pull back, right, we could pull all the way back to here, which is about 243 and still be bullish. Right? We could even pull back as far as this half square and still be bullish. You don't want to see that deep of a correction, but there's still a lot of because you get it when you get a strong push up, you can check back and still go. And that's what we want to see. Maybe they're going to fill this gap, Barry, which
Yeah.
would be
Yeah.
266.
Mhm.
Let's take a look at the weekly. I wanted to show you the weekly and the monthly. We were trying like hell to break out of that triangle this week. Look at that. Not ready,
Wow.
right?
Almost. It's priming.
Almost.
It's priming.
Yeah, it is priming. It's priming. And remember, the longer we stay in this formation coiling up, the more energy that gets released when the breakout happens. Ideally, if we're going to pull back, I mean, we still had an up bar. We did close on the lows, but if we're going to pull back, ideally we want to stay on top of like 270, which is this half square, and then see, when one of these weeks we're going to get that actual breakout of this triangle and the powerful move that comes with it. The low we talked about a couple weeks ago, we had 90 high to low, from the lower high here
Hmm.
to the low here was 90. So that low looks good. Now it's just sort of creating and finding a good risk reward spot to get in because we're confident the low is good. Now we want to see a nice spot to trade this thing again to the upside. Let's look at the monthly.
Yeah.
Same story. Tried to break out, didn't quite make it. But the break looks good, like it's going to happen because as you can see, we have decent timing here. 45 low to low. And this thing likes to do 45s here. You got a low to high 45. So everything's lining up for it. As with most things in the market, never happens fast enough for you. You got to be patient. But I think good things are coming and higher prices are coming for nat gas. Anything else you want to add, Barry, on the weekly or the monthly?
No, we're good. You did it amazing. Look, I really like watching the higher time frames, weekly and monthly, because it brings you back to sort of reality.
Yeah, it kind of filters out some of the noise. And speaking of noise, Barry, the question I have for you that I want to discuss this week, because that's it for the commodities. The question I had for you is, I think, an important one, and
Hmm.
it gets to trader psychology. When when you have a trade that doesn't work out, or a trade where you lose money, how do you handle that mentally so it doesn't affect you on your next trade? What's the self-talk? How do you deal with losses when you take them?
Well, it's all kind of baked into the bigger process. We talk about, what do we talk about a lot? Even on our channel, we talk about managing your risk, right?
Managing your risk, yeah.
So the idea is, and we talk about, what's the other thing we talked about a couple of weeks ago was about how when you backtest something, you're looking for setups. Whatever the setups that pulls you into the trade should give you at least, sort of like a 3-to-1 advantage. So you want to use that. And that's why we use the fuse lines for the S&P. And by the way, we post those on X every day, a couple times a day.
Sure.
And the reason we do that is it helps us limit the risk, right?
Because you know
And
where you're going to be wrong.
exactly. So which is pretty much the only thing we can control in when it comes to the markets. It's how much are we willing to risk? So when you're looking at it from that perspective, the risk you're willing to take is already baked into the trading
Mhm.
process.
Mhm.
Right, Ben? Would you agree with that?
Absolutely.
Right. So then this is why we talk a lot about, hey, go back and back test to see how the system did. We talk about if your system is picking up a long trade, if your system is picking up a short trade. So the idea is that numbers and levels that we share with you, it's supposed to sort of form a template around the system that you're using. So if your system goes long, and let's say it's set up positively around our fuse line or one of the square lines, then it has a higher probability. And the same thing for the short side. And as far as the risk goes, well, if you know your system, you're getting, anywhere from 8 out of 10, 7 out of 10, 6 out of 10 correctly. And those are the ones that are going to go on to make money. Some might be break even, but the losses and all of those, the other seven trade, let's say you get 70%.
Mhm.
The seven, you don't know which ones are going to be home runs, which are going to be base hits, right? Some might be break even.
Break evens. Yep.
Yeah, we don't know. But what you do know is the losses are exactly how much it's going to be, because you can control that. So I think the short answer, that's sort of my build up to the short answer. The short answer is you have to be able to be comfortable. You have to be comfortable with that risk you're taking.
Right.
Totally comfortable. It's like you have to be able to write the check without shaky hands. You write the check, okay, I'm willing to take this risk. It's fine. And in a longer timeline, you're going to be wrong 30% of the time.
Yep.
And you're okay with it because 70% of the time you're going to be okay. So that's the key. I think the key is it's so hard for the mind to understand this. So that's why it's really good to go back and back test your process and come up with 3 to 1, and the worst case 2 to 1, but let's say 3 to 1 ratio set up somehow, which is we're still talking about the entry, right? When we're talking about risk,
Right.
obviously, right? So then you have to work on when you take profits, partial profits, full profits,
Sure.
and then link that up to your risk, where you can start moving up your stops at a certain point and get to break even as soon as you can. So, which means anytime you get blown out, it didn't even get to break even. So it's supposed to break out. That's the whole point of a stop, right? Okay,
Right.
you're wrong and you want to know it as soon as possible. And that's what you're willing to risk to know that.
No, that's
And
that's great stuff. That's
right.
great
And
stuff.
so the quick answer is you really want to know what that earliest possible time, if you're wrong, and that's the risk you're willing to take. And if you're comfortable with the check that you have to write to find out, that's the price you have to pay. It's the cost of doing business, right? That's our cost
Absolutely.
of doing business is
It's
basically
cost of goods. If you're running a store, that's your cost of goods sold.
exactly. So I think if you have that kind of a perspective or approach to it, then it's much easier to deal with it because it's not personal. It's not, oh my God, I messed up, or
Yep.
oh my
Yep.
God, I forgot, right?
You know
And
what was the best thing? Mark Douglas said it. He said, it's not a losing trade if you followed your system. That's
exactly.
how you judge yourself. Did you follow your system?
Exactly. That's
So
exactly right. So I think it comes back to the systematizing it and not making it like a whole mental thing.
exactly. Well, listen, that's a great show. A great way to end a great show, Barry. Thanks for everything you did. Again, people, we're really glad that you've helped us this year grow the channel and send it to your friends and subscribe and do all the things that YouTube wants. We really appreciate it. Have a great weekend, and we'll talk next week.
All right. Thanks, Ben. Great job. We'll see you soon.
All right. Take care.
Bye bye. Bye, everybody.
Bye. Bye.